Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 22nd of March 2019, so welcome everyone. Welcome to this Friday's morning session where we're gonna have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then guys, let's quickly jump into the charts. Now the first one I want to touch on here is gold. Now yesterday I was talking about gold, my traders Espresso as well, and we were trading basically above this 13, 15, 16 level. So I was telling you guys to keep a close eye on this one, because if this decides to travel back down below this, then yep, we could see maybe a further slide lower, and you can see this is what happened yesterday. Gold sold off and almost managed to reach this upside support line, this tentative upside support line that has been running here from the lows of the 5th of March. So of course after that we did have a bit of a retracement here back to the upside, but again it's currently sitting just slightly below or just bang on the pivot, today's pivot, which is around the 1311. Now I was talking about the 1311 level as well, and in my previous videos this week, so where I was talking about gold, and basically this is one of those areas as well to keep on monitoring, because if this struggles to get back above the 1311 today, then yep, we might see maybe a slide back down and eventually a test of this upside support line. So that's why guys, keep your eyes on this one. Certainly given this yesterday's activity, now we're leaning more towards the downside, but then again the downside only up until this short-term upside support line. So if we do see a move here, then we'll have to reevaluate it again, see how it's performing. But to be honest, in order to kind of, let's say, consider much lower areas in the near term, or in the near term, we would like to see a drop below the psychological 1300 level, and only then we will target areas like the 1290 or lower. For now, you can see that yes, it is trying to kind of push above this, above the this pivot, above the 1311 level. Still, even if it continues to push higher, for us to get more excited with higher areas, we would like to see a nice good push above the 13, 15, 16 area, and then we will target higher levels, like for example the 13, 20, 21, or even higher. But for now this is where gold is. It's currently pushing above the 1311. Of course, let's see if the bulls do have enough steam to drive this one further up here. But like I said, the 13, 15, 16 area, that's the one that we're going to be looking at. If we see a nice break above this, then yep, we will target higher areas. For now, if this decides to reverse back down and stays below the pivot, then yep, we will be aiming for this upside support line. So keep your eyes on that one. Jumping into one crypto, one of my favorite ones here, Ripple, and of course you can say that there's not much happening here, and I totally agree with you guys. I mean, there's not much activity. It continues to kind of trade between the same levels here, the same 0.31 the same as 0.3115 level on the downside, and the 0.3230 on the upside. The only thing is that we probably might adjust this a little bit here. We could start looking at this little area here around the 0.33 area, approximately there. So in a way, it continues to kind of trade within this little range. But the only problem here is that once I was talking about this formation that the crypto is sitting in currently, at this rising channel formation. But as you can see, it kind of managed to get out of it already. So managed to pierce through to the lower side of it, and actually managed to kind of remain below the lower bound of the rising channel. And of course, as if we're going to compare it to the 14th of March, for example, we did break it to the downside. We did break the lower bound of the rising channel to the downside, but quickly you see the crypto got back inside of it. But now you can see that it broke it to the downside, and now it remains here below. So in a way, this of course increases the chances of seeing maybe further declines here. But don't get me wrong, for further declines, we would like to see a nice good firm break here below the 0.3115 level first, and then we will target areas like, for example, the 0.3050 or even lower. But for now, we're just going to remain cautious, or even I should say cautiously bearish. But we will wait for a confirmation break first before we can get excited with the downside here, or should I say the bears could get excited with the downside. In terms of the upside here, as you probably are understood now, we need to see this one traveling back inside this rising channel formation. And to be honest, it would be ideal to see this one pushing initially above the 0.3230, or even actually for a more of a from the near term perspective, in order to kind of consider higher areas in the near term, we would like to see a nice good push above the 0.33 area, and then or even the 0.3320, which marks the highs of the 1st of March and the this one right here near the 13th of March. So a nice good pop above that level here could lead the crypto higher again. So for now, continue observing this little area. You can see that it's currently sitting below the rising channel formation, but it might get back into it. If it doesn't, then watch out for the 0.3115 level. If it starts breaking it, then further declines could be possible. Excuse me. GBPCAD. Now, this one is a very interesting one, and of course, yesterday we saw this one selling off initially, and it managed to reach this key area of support here near the 200 EMA and near this 174.30 level, but you can see that it quickly got back to the upside. It almost retraced all the losses and recovered all the losses, and now it's currently sitting just slightly above the 175.55 levels. So we're going to continue monitoring that. We're not going to say that we're bullish on this one. We would, for us to get comfortable with higher areas, we would like to see this one, of course, initially pushing back above this upside support line. This would be a first good indication that the bears might be losing their grounds here, but for a better confirmation, we would like to see a nice good push above the 1.7675 zone, so which also coincides with today's R2, and this way we could then get slightly more comfortable with higher areas, and we will then target areas like, for example, the 177.75, which acted as a very good area of resistance here back on the 11th of March, on the 13th of March, and also on the 15th of March. So but that's why, guys, for now, be very careful, be very cautious with this one. Certainly, like I said, it is very interesting, given the fact that we also do have some Canadian data coming out here today, so might see some volatility in this pair during that time. So check out the economic calendars, guys. So for now, this is a scenario for the upside. We need to see a nice good push above the 176.75 level first, and then we'll target higher areas. In terms of the downside, if this suddenly starts dropping back down below the 175 zone here, then of course we will start maybe shifting our views more to the downside. The only problem is probably for a better confirmation for the downside, we would like to see a drop below the 174.30 level, where it yesterday found good support, because this way the pair would also drop below its 200 EMA, which could be seen also as a bearish indication. So that's why for now, in terms of the downside, yes, we will look at this area here around the 175 level. It's not far from today's pivot. If we see drop below this, then we will target this 174.30. But if this gets broken, now this is where we could get even more comfortable with the down. So that's why, guys, this level here, the 174.30, could be the the area for which could confirm further declines, and it could confirm a forthcoming lower low. So that's why, yep, for now, guys, be very careful. And again, like I said, for those who are more on the cautious side, you can in a way wait for a break below this level first. Jumping into USDJPY now, I was talking about this one in also my yesterday's Espresso, where I was telling you guys to keep an eye, of course, keep an eye on this potential move here, where we could see maybe a bit of retracement to the upside, and you can see it worked out perfectly. We had a nice retracement here. We managed to touch the 110.90 level, which also coincides here with the 200 EMA. So yesterday it had a nice perfect touch of it. It's currently holding the pair down. Let's see if actually this scenario works out and if we see another leg of selling here. So in a way, what you could do here, let me actually just get this out of the way here. What you could do here is, from the very short-term perspective, for today, you could in a way wait for a drop below the 110.63 level, and if we do see a drop below this area, then yep, further declines could be possible, at least towards these lows near the 110.43, or even actually going further down towards the 110.25 zone. So which kind of marks the low here of the 15th of February. So certainly some very good areas of support here, but let's go step by step. Initially, let's target the 110.63. If we see a drop below this, then yep, that's wonderful. We will target the recent lows, or should I say the yesterday's the yesterday morning lows, and then of course if those fail to withhold, then yep, further declines could be possible again. But that's what I'm saying. So guys, for now, let's go step by step. Let's do it short and simple, and wait for wait and see what it wants to do with this 110.63 level. If it decides to push higher actually and decides to travel initially above the 110.90 and breaks above the 200 EMA, then well, we could in a way target the 111.15 zone, marked by the lows of the 19th of March. And if that fails to withhold, we could see the rate getting placed above the 100 and the 50 EMAs here, shown as the green and the red lines respectively. So the next potential target here could be around the 111.40, but to be honest, this could be just seen as a little maybe obstacle here, because this could travel further up here, maybe even test the upside support line from underneath. So in a way, guys, long story short, this is the scenario that we're keeping a close eye on. So if we see a nice good push up of the 110.90, keep your eyes on the 200 EMA. The next target for us will be the 111.15, and then if we see a break above that, then yep, further acceleration to the upside could be possible. But again, let's go step by step, and certainly for now, given the what we are seeing here at this point in time, it's currently sitting below its 200 EMA and below this key area of resistance at 110.90. So that's why it's looking more to the downside. The only thing is we're going to remain cautiously bearish, just because the pair is sitting right now above the pivot. So that's why we're not gonna jump into those shorts yet, because like I said, we need that confirmation break first. And the last pair I want to quickly touch on, and that's euro dollar. Very tricky pair. Yesterday sold off and basically wiped out all the gains of Wednesdays. You can see that it traveled lower, traveled below this downside resistance line, and currently it's testing it from underneath. It also managed to test the pivot, which is around the 113.85 zone approximately there. So in a way, that's going to be the barrier that we're going to be keeping a close eye on today. A nice good break here, another good break above this downside resistance line, and a break above the pivot could lead the pair back up here again towards the 114.20, or even actually towards the Wednesday's highs or this week's highs near the 114.50. So basically, if we're going to put an arrow here nicely, that's the scenario we're keeping in mind, but only if we see a nice good pop above the above both the downside resistance line and this pivot, which is around the 113.85. If this reverses back down, this is is the level that we're keeping a close eye on. I was talking about this this area here near the 113.50. You can see that yesterday we managed to break it slightly lower. The pair found good support near the 50 EMA, shown here as the red line, and from which it reversed back above here. So that's why the 113.50 for us, that's going to be the level that initially that we're going to be keeping a close eye on. But even for better confirmation, if we see a slide below the 200 EMA, which you can see here on the 4-hour chart shown as the black line, that's approximately around the 113.40. If we see a drop below that, then yep, further declines could be possible towards the 113 level or even the 112.90. So that's why, guys, for now, of course, for in terms of the downside, the 113.50, that's the one we're going to be looking at initially. In terms of the upside, we need to see a nice good push back above this downside resistance line and this pivot, and which are and the pivot which is next to 113.85 level. So keep your eyes on that one. Okay, guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me later on at my Traders Tea Time, and that's 14:15 GMT time as always, and I hope you have a fantastic last trading day here today. So yep, and I'll see you later in my Traders Tea Time, guys. Thank you very much. Bye bye.